Hey, how's it going, everybody? I'm your crypto sensei for the day, and welcome back to the Satoshi Club. Now, in today's video, I'm going to talk to you about crypto versus the traditional stock market. What are the benefits of cryptocurrencies? What are the pros? What are the cons? And the same goes for the stock market as well. So we're going to go into quite some depth about this topic. And if you do enjoy it, I would really appreciate it if you left a like on the video, subscribe to the channel, and leave a comment down below if you like my glasses, right? So let's move straight into it. First and foremost, I wanted to talk about valuation. Now, something very interesting that I'm going to discuss with you at the end of the video is crypto market cap compared to other asset classes such as real estate, such as stocks, such as the forex market, and everything, just so you can get a glimpse of just how small the crypto market currently is and how much potential it does have to grow into the future. Now, back to valuation, that is the topic of the current moment. Basically, a stock represents ownership of an actual business. So you could say that it has a tangible value. Some people say that cryptos don't have a tangible value, which I tend to disagree with, because Bitcoin's underlying value is actually the price of electricity. And if you wanted to shut it down, you would have to shut down the entire power grid of the entire world. So Bitcoin does actually have a tangible value, but that's besides the point. So stocks, they have a tangible value. They are a part of an actual business, and stock investors can base their decisions of investing on business results, cash reserves, a lot of different ways of calculating risk, calculating cash flow, free cash flow, all this other stuff, growth prospects, and a lot more. Crypto, on the other hand, is a little bit more simple, and the market value currently is simply based upon supply and demand. So if you buy at a certain price, do you really think you can sell your crypto at a higher price at the same exact time? Well, probably not, because the supply has to be equal to demand in order for a transaction to go through. Now, you could argue that the stock market also is based on supply and demand, which it is, but the fact that there are actual companies out there and releasing a scheduled amount of info to the market, it means that the market can be influenced by this type of news, whether it is, to increase the stock price or to decrease it. So that's something that comes with regulation in the stock market industry, where registered stock brokers, firms, and everybody has to be on par with every single legislation out there. So they have to be releasing their quarterly earning reports and all of this other stuff in order to educate the market about them. Now, the market always speculates, but that's one thing that is the same with cryptos and the stock market as well. Now, one thing that the stock market does have as a big advantage of cryptos is the fact that it is less volatile. So here's an example of Bitcoin versus Nvidia, right, on the chart, and you can see that they work quite nicely correlated. So Nvidia is this orange line, crypto is this, Bitcoin is this other one, and you can see that they were pretty tightly correlated until some news came out, and Bitcoin just suddenly surged by a lot more percentage-wise than Nvidia surged itself. So how did that happen? Well, it's very simple. Crypto market cap is a lot smaller than the total market cap in stocks, so hence the same amount of money in crypto will move a lot more percentage-wise when it comes to crypto than it will in stocks, because the market cap is simply a lot lower. So the market cap of crypto could be $1 trillion, could be $2 trillion, but the market cap of stocks is about 100 times as large. So keep that in mind. And that brings me to my next point, which is what is safer for a long-term type of an investment. Now, I will go through pros and cons in a second or two on the Binance Academy. It's a pretty good website. If you guys haven't checked it out, you may want to do it to learn more about crypto and everything else going on. But investing versus trading, what is better? One thing that you guys gotta understand is that volatility is not good for the long term. So you may be a crypto holder, die hard or whatever, but holding crypto for the long term is potentially, and currently we have a lot more info about what the stock market actually does in the long term, since it's existed for like 100 years by now, and it is a lot safer to invest in the stock market because you have already seen some past returns, and you already know that the technology is unable to be really tampered with, right? There's not a lot of manipulation when it comes to stocks on the basis of like 30 years from now. So if you're making a retirement plan for yourself or your children or something, it's probably better to do it in stocks. But crypto is there for trading. Now, you may have a different point of view than I do, but for me, trading crypto is difficult, right? It's very difficult. Trading stocks can also be difficult, but trading crypto is something that you have a lot more potential to make bigger gains because the volatility is so huge. So you have big up legs, big down legs, big movements of price all the time, so you're able to profit from them if you have a sufficiently good strategy. Investing, on the other hand, well, it all comes down to, do you choose the winners or not? So it could be very similar when it comes to stocks and crypto, but the one thing that you do have to keep in mind is the crypto market cap is a lot smaller than the stock market cap. So for example, if you invest a lot of money into crypto and you're planning to hold it on the long term, make sure that this is money that you are ready to lose, because the volatility is so huge. The market could just dump at one point and you could be left with a 90% lower portfolio than you did have initially for the next 5 years or so. So if you're fine with not having that liquidity and waiting it out for the long term, that is completely fine. Now, a bit of pros and cons of investing in cryptos themselves. Well, some of the pros are, first of all, anybody with an internet connection can access it. Second of all, it's decentralized, so it doesn't rely on some middleman to take a fee or percentage of anything that you're actually doing. It is completely inflation resistant, so cryptos aren't directly influenced by central banks' monetary policies. So we did talk about this a little bit in one of the previous videos. You can check that out on my channel. Basically, inflation is something that crypto is not really hedging at this point, but it may be hedging in the future. And if you want to know why, well, check out the previous video on Satoshi Club right there. But in general, it is inflation resistant in theory, right? Because it's a limited supply. Now, it's also flexible compared to stocks. So traders can, try to yield farm. You can stake, you can earn a passive income in crypto. You can do a lot of different stuff. Whereas in stocks, you sort of just educate yourself, buy it, and then you just hold, right? And cryptos are also very, very varied. So you have a lot of different stuff going on. You got a lot of new concepts coming out in the DeFi world, in the Web3 world, in the NFT world, and there's just so much stuff to actually choose from. Now, the cons are price volatility, which could be a pro as well, in my opinion. Imperfect regulations, so not a lot of regulation at this point, which could also be a pro at this point as well. Custody risks, so it requires a private key, which if you actually lose, you're not able to access your funds anymore. So just don't be that guy. Always remember your private key, always write it down on a piece of paper, lock it in your safe, and never forget about it. And also, returns are not guaranteed, but that is the same in the stock market as well. Some of the pros and cons of investing in stocks themselves is, first of all, they are increasingly accessible. So you're able to trade stocks just like this online with online brokers. And this is what CFDs actually brought to life. So if you want to actually own a stock of a company, you have to buy a certain amount of stocks. So you have to buy either one stock or two stocks or three stocks, right? You can't buy half a stock. But what these brokers nowadays are doing are releasing these CFDs, which are basically derivatives of stocks that allow you to buy, for example, half of an Apple share if you want to. Now, you're not necessarily owning the stock itself, so you don't own the right or the actual paper of the stock, but you own it when it comes to the broker, and basically that's just how it works. So technically, you don't actually own the stock when you buy it, but non-technically, you do own it. But that is a little bit besides the point right now. Pros of stocks are also that they are regulated, which could be a con in my opinion. I mean, regulation could be good, could be bad. It depends how harsh it is and does it affect me or no. Inflation resistant, well, not really. I mean, inflation was huge, prices were moving up, and then when inflation started being tackled, prices started moving down. So stocks are not really an inflation hedge. Gold is actually a pretty good inflation hedge, and I also talked about that in another video, so you can check that out down in my previous videos on the Satoshi Club. And some of the cons are obviously volatility, higher fees, and not guaranteed returns. So I hope you understand a little bit more about the benefits of trading both stocks and cryptos. Ideally, you would want to diversify your portfolio, so you have a little bit of crypto, you have a little bit of forex, you have a little bit of stocks, a little bit of real estate, holding a little bit of gold, and having some cash on hand as well, because in that case, nothing can really rattle you, right? Even if it's a bad situation in the world, you will always have sufficient liquidity, you'll always have sufficient diversity, and you will be able to exchange your money from one thing to another if you have enough assets in enough different sectors, right? So one more thing I wanted to show you is you have the Bitcoin versus US 500 chart. So as you can see currently, or since the 5th of December of 2021, it's been quite nicely correlated. So this you can see right here, this is the Bitcoin chart and this is the US 500 chart. It is slowly starting to lose correlation, which you can see by, for example, right here, it's a very, very low distance between them. So they were quite correlated at the point. But the distance is actually increasing over time, and Bitcoin is falling more drastically than stocks are falling at this point. So why could that be? Well, it could be that people just don't trust cryptocurrency just yet, and they want to, make it a little bit more. You need the market cap to increase a little bit for people to start trusting crypto like they do trust gold or stocks in the stock market. Now, the most important, or probably the most fun part of this video, is taking a little look at a few charts when it comes to precious metals, real estates, equities, debt securities, and more, and comparing them to the total crypto market cap from back in 2021. So around the peak, the crypto market cap was $2.35 trillion. And as you can see, compared to gold is at $11.4 trillion. Now, please take a look at the previous video when it comes to is Bitcoin a hedge against inflation. It's going to be like on your right or something. Check it out because I do explain why crypto can reach gold's market cap at some point in the future and then become an inflation hedge, potentially even bigger than gold itself. Real estate, well, real estate is a lot more huge than gold. $340 trillion in real estate right now. You have commercial real estate, and all of this stuff just completely trumps Bitcoin as well, or the total crypto market cap. Sorry. Equities or stocks, which we are talking about right now, they're referred to as stocks or equities. If you hear equities somewhere, they're talking about the market or the index of the top 500 companies in the US, or generally the whole stock market in the world. And as you can see, it is $122 trillion compared to crypto's measly $2.35 trillion. So if you want to, wait, one more. So GDP compared to the crypto market cap. This is a very interesting stat right here. The total world GDP is $84.6 trillion. However, the real estate market is $340 trillion. So there's a lot of debt circulating the world, which is kind of scary when you actually think about it. But, maybe that's why crypto is coming in pretty clutch, and maybe it does solve some big problems in the world. For example, public and student debt is at $226 trillion, and the US student debt is $1.7 trillion, which is actually smaller than the total crypto market cap. And lastly, you have these purchase programs of QE, which is basically printing money into the economy. It is $8.5 trillion on the Fed's balance sheet, which is a lot larger than the current crypto market cap. So that's pretty much it for today's video. I just wanted to give you a little insight into what the key differences are between Bitcoin and cryptos in general and the stock market. But one thing that you guys got to understand is that you are able to take advantage of Bitcoin's smaller market cap and the fact that it is lagging behind stocks at this point, because just imagine crypto, the Web3 world, if you believe in it, you certainly can imagine that it will reach a market cap at least the size of gold at some point in the future, right? If it's going to become a hedge to inflation. So if it's going to reach the size of gold, it's going to basically times 5 in value overall. So if crypto overall is going to times 5 in value, hypothetically, then, if you put your money in right now, well, at some point in the future, you're going to have your money times 5, right? On average. So maybe it's time to, try to take advantage of crypto's small size right now. Maybe we're just early, maybe we're not. Think about it. Leave a comment down below if you enjoyed it. This was your host, your crypto sensei on the Satoshi Club, and I will see you all in the next video.